Hello everyone, Evan Kaufman. Welcome very much. Thank you very much for coming. I'm your VA loan originator. If you happen to have just watched our VA loan crash course that we had, the monthly one about 30 minutes ago, thanks for staying on and watching with us here. And we had some folks registered, so we're going to let people kind of get logged in for this one because this is our special monthly edition. So each month we do the VA loan crash course. All you need about a VA loan, 15 minutes or less. Or I say almost all you need to know in 15 minutes or less. Then we usually follow it on with a unique topic. So we'll adjust that where, especially when it's prime PCS, military moving season, might be something on home buying or the PCS buy versus rent decision and stuff. And so just changes with the time that we're in. Right now, with VA loan interest rates having pulled back over the past couple months, and really with the big special we got going on right now, we're having our discussion on the VA loan streamlined refinance, something called your favorite Uncle Earl that we'll talk about here in a minute. So as folks still load in, our slide for the day, we like to say it's, hey, lower your rate, VA loan refinancing, and its basics. So let's get in a little bit of background about myself as folks still come on in for us. My name's Evan Kaufman, your VA loan originator. They made this beautiful slide here. You can scan that QR code and it goes somewhere, probably to contact with me. But background on me, I was in the military. Enjoyed my time while I was in as a contracting officer in the Air Force, ended up getting out and sold real estate. So I built a real estate brokerage, sold real estate for primarily military families. And as I started moving around the country, helped connect with real estate agents, and we built the company called VA, connecting military families with military-focused real estate agents. And then a couple years ago, I stepped out of that business to build what we call VA Home Loans. We had seen where we can help bring some consistency to the military moving process by connecting people with quality real estate agents. But there was still a huge pain point, and that was in the finances. Folks would say, hey, you guys really help bring consistency to the PCS with the agents, but our lenders, my lender might be licensed in this state, not in that state, all over the board. Different opinions, different thoughts, they all got everywhere, and we thought, hey, how can we build that ourselves? So unlike connecting people with agents, we actually run VA Home Loans where we are the folks you're working with. Like right now, if you reached out and said, hey, I'd like help with a VA loan, you're probably gonna talk to myself. You might talk to our loan officer assistant, Spencer, or someone up front to get scheduled in, but you're talking with me and we're walking through everything. So if you like what you see here, please feel free to reach out. We're here for you. This is the stuff we love to do. Now, I think we have a slide on Weave It, actually. It's probably more important than a slide about me, but that's the basics you can see on me there. Love doing what we're doing. And the next slide, sure enough, is about Weave It. So basics about us. I already hinted at, we're kind of a brand between two companies, trying to bring consistency to the PCS process as a whole. The tagline that we like to use is we help military families find and finance their next home. 70% of our business is active duty military, 90% of our business are VA loans. So we still work for veterans, of course, but our prime focus is working with active duty military families. But if you're a vet, hey, work with us, you're helping support the active duty community. And that's one of the beautiful things, that is our focus, what we like to be on. We have VA Home Loans, what I run, where we're working VA loans primarily, and then we have VA Realty, connecting folks with real estate agents that understand military needs. Now, the deal with us is we have something that we like to call our client 20-year vision, and this is where this discussion specifically gets me pumped up. If you ask anyone on the team why I get super excited about these refinancing discussions, it's because it runs right in line with our client 20-year vision. It's unique. Most folks might hear, especially real estate, I guess, how should I say this right again? If you know me personally and you're watching as a friend, you're like, God, I know Evan doesn't like debt, which is ironic because we do mortgages and stuff, and I don't. And so our client 20-year vision is a little weird in that it is to help our clients have a paid for, near paid for home by retirement. So actually to oddly eliminate us from the mortgage if possible. And if you don't want to have a paid for home, some people are like that, I guess, that's okay. But reducing your monthly payments at least and investing money and saving for it to have financial freedom does make sense. I got out of the Air Force. Financial burdens are a huge impact when getting out. Our goal is to help reduce some of that stress when people decide to retire or even just get out of the military. So that client 20-year vision, why I'm hitting on that right now is because this discussion dovetails and is a huge key component for us achieving that 20-year vision for all of our clients. So keep that in your mind as we start talking here. Client 20-year vision, have paid for, near paid for home by retirement, and you'll see why when we talk about these refinances. So the agenda for today, talking about how to lower your rate, which really means increase your savings. We're going to talk about why consider refinancing now. You've heard it maybe in the news, or you might have saw this post and gone, what do you mean refinancing? Why should I look at that now? Well, we'll talk on that here briefly, what's been going on. Next, we'll talk about what is a VA IRRRL. We'll talk about what an IRRRL is, or IRRRL. You got to say usually an extra R in there if you forget it. So there's just 3 R's in. And we'll talk about the benefits of that IRRRL. We'll talk about the eligibility and process of doing one of these, what we like to sometimes call streamlined refinances. And then we'll wrap it all out where, hey, how do I track the optimal time to refinance with my VA loan? We've built something that's really cool, and I'm going to roll it out and tell you about it on one of the last slides. It's a really cool feature that you'll want to stay and watch for. So let's look first. Why consider refinancing now? Question mark. I'm not going to say everyone should be refinancing right now because it does depend. However, more people should consider refinancing right now than they did just a few months ago. And this next slide is going to show why. It's a little graph. If you got to squint at it, you might just notice that the whole goal here is to point out that if you notice at the end of that graph, there's a little circle in the box. Notice that it is lower than most all of the time before that. This is a graph about the last 2 years in the typical 30-year VA fixed loan. The deal is over the last couple of years, the average VA loan was over 6%. So it was a higher interest rate. And in fact, for many folks, it was 7% and some even topping 8% depending on what lenders they were working with. So the deal is VA loans have been across the board for the last couple of years. I would say kind of more in that like 6.5 plus range. And now they've popped down a bit. So they've started to pop down, and the expectation is we might see some more of that over the next 6 to 12, 24 months. We could see some more lightening in that rate. Personally, I'm saying we already had a nice drop now. That's why we got to consider these things. And then as we'll talk about here in a little bit, you can always do a refinancing again in the future. But if we stay in this zone, you'll be happy where you're at. Because right now, rates are lower for the most part than they were in the past. The basics of it are, that I'll say up front here, is if you got an interest rate over 6%, this is really the discussion for you. This is the one where you want to start looking at, hey, Evan, can I possibly refinance? Let's go over what the scenarios could look like. We've closed a lot of clients recently, I know, that are over that 6% mark, and rates have just pulled back for it, especially with this refinance special that we have going for us right now. Hopefully we're going to have that still in the future too, or rates continue to drift down, and we'll get to pull people back down some more. But know that right now, thanks to seeing this graph, rates are lower for the most part than they have been on average for the past 2 years. So that's why you might be hearing, oh, rates are better right now, because they actually are. So if we have a VA loan though, what does that even mean for me? Well, the VA loan has a unique component to it that no other loan type has, and it's called an IRRRL. And what the heck is an IRRRL? Well, an IRRRL stands for Interest Rate Reduction Refinance Loan. The definition of it, and this is where I like to just know the history of it. If you watch my VA loan crash course, talk about World War II, how that kicked off the VA loan, numbers coming back. By the way, it's like the 80th anniversary for the VA loan, pretty cool. The definition for the IRRRL is that it actually came from, I already said the definition, interest rate reduction finance loan. Know that some people might also call it a VA streamlined refinance. So if I say that throughout here, streamlined refi, it's because it just sounds sometimes easier than IRRRL, although I like IRRRL a lot too. But the background to all this is 1980, Congress enacted a new law that allowed these IRRRLs to be possible. And the whole goal was to help military families and veterans and spouses of military veterans lower their payments if rates happen to come down, and to lower them very easily, as we'll talk about here in a minute. But the IRRRL is just a cool feature of the VA loan because nowhere else really has it. And here's the reason why. When we look at it, there's what I like to say are the benefits of an IRRRL called the big three. There's no appraisal, there's no income documentation, and only a soft credit pull. There's no need for a hard credit check. Now that one can be a little interdependent, but for our sake now, we just need a soft pull. So let's go back on those. The no appraisal is a huge one. So the fact is, with a VA IRRRL, you don't have to pay for an appraisal. That can save you. We've seen appraisals anywhere in the country, right, from $500 to $900 or so. That saves you that cost. But number two, let's take that a step further. I like to call it I put it on the slide there, even Armageddon button. And the reason why that is with the VA appraisal is because let's look back 2008-9. That's when everything blew up in the housing market, and in general, home prices actually went down. Really rough time that happened. Now, when that occurred, if you had a conventional mortgage and you went out to try to refinance, because what occurred was interest rates went from here down because the Federal Reserve government was trying to fuel the economy, get rates down to spur people back up because we had this huge crash. Thing was, people went to go get these refinances to lower rates, and they couldn't do it. They couldn't go do the refinance, so they had an issue doing it typically because to do the refinance, they had to get an appraisal. And if they got the appraisal and they were underwater on their home, they couldn't do the refinance. So that was an interesting part of it, right? They bought the home at, let's say, $500,000, and all of a sudden now it's only worth $400,000, but they need 20% equity in the home. The equity's gone. It's all out the window. So you would lose it if it was a conventional loan. VA, if you had a VA loan and you wanted to do an IRRRL to take advantage of those lower rates, if you were underwater on your home, you were still okay. So some stipulation parts to that, but really it made it a lot easier to help folks that if there was an issue with appraisals to still get that refinance done. Huge component of a VA IRRRL that is very unique. Next part is looking at that no income documentation. And I point out no income documentation, it's really, we're not needing bank statements or other documents at all. The basics to get one of these done for you, as we'll talk about in the process part, is we get your most recent mortgage statement, your photo ID, and then if you're not a past client of ours, which is a lot of these IRRRLs we do, because we'll talk about that in a minute, about how folks are very rarely notified about doing IRRRLs, we'd most likely need your insurance, your most recent insurance declaration page stuff that we can work through to get your insurance updated. But there's not much for documentation. That's really it. And then we get rocking and rolling and knock these things out. Now, let's take a little deeper. What does that mean? We just talked about how the appraisal not only is going to just save you a few $100 or like up to $1,000, it also helps protect you from that value issue that could happen if there was ever a blow up, Armageddon button, liking to call it. The no income documentation part, or just minimal documentation period, what does that mean? Well, this is really big for transitioning active duty members that are going to civilian world. If you haven't, or if you're watching this, I know we got a lot of folks that registered, they're kind of that line of maybe transitioning out. We have a very specific course called the Military to Civilian Transition, how to buy a home when you're transitioning out of the military. There's a lot of nuances, by the way. Go watch that. But point is, when you transition out and your income changes from just your classic LES or military pay that's very consistent to something else, it can make it hard to qualify for a loan, especially if you're going self-employed or if you're starting a business or join a family business or something like that. It can get real murky. And so sometimes if you had a conventional loan, you might not qualify for that appraisal because your income wouldn't count, even if you got out and started your own thing. Or you got out and you just wanted to take a break. Man, rates came down, but I decided to just take a break for the last 6 months. Sorry, can't do the refinance, man. You're stuck at that 7%. Can't do it. VA IRRRL, don't matter. You're good. Cool thing about that VA IRRRL is that if you bought your home with a VA loan at your last duty station location, you're there for a couple years, you got out, and then all of a sudden rates happen to drop and you just started your dream job that was maybe you going out on your own. And by the way, it's hard to document that income unless you got at least 2 years of tax returns in the future. Yeah, there's some nuances to it. People are like, Evan, but you can. All right, thanks for picking out the random one-off scenario. But for the most part, it's hard to document that income until you have a history of it. VA IRRRL will still allow you to do it. That's why it's huge. Going back to that Armageddon button, it's kind of like, hey, 2008-9 happens again. Home values stall out for some reason. You lose your job. You could still do a VA IRRRL, which is pretty incredible. Now, soft credit pull is the next one. Credit still does matter. You can't miss all your payments. That's one of the keys. You got to make sure you haven't missed a payment. As long as you made all your payments, we actually don't need a hard credit check on these anymore. Soft pull gets it done. So make sure that you have made all your payments. That's the reason why you got to do that soft pull to check, but we don't even need to have a hard credit hit. And that one thing I put on here in the slides is that prevents spam calls. I wouldn't have had that there a few years ago, but over the last few years, if you've had your credit pulled at all, you can get hammered with spam calls because the credit agencies now are selling people's information like wild because they just hit me because we just had a talk earlier today about having to change privacy policy stuff on our website stuff because there's a new law that's supposed to prevent you from selling stuff. But then it just hit me and went, are we going to prevent the credit bureaus from actually selling all our information? I kind of wonder that. Random offside note, usually stay on track. Point being, they're selling your information like crazy. Soft pulls help prevent some of that. You can also go and opt out if you want, called consumer opt out. Check that out if you want online. They'll take you out for 5 years. But the basics are you can avoid a bunch of spam calls with the VA IRRRL, which is a pretty cool feature. So those are the big 3 benefits of that VA IRRRL. And before we step into this eligibility process part of it, though, this is where I want to touch back and tie it really into our client 20-year vision. Those are the big 3, I would say, benefits from just the hassle that you got to deal with a VA IRRRL or doing the streamlined refinance. Where the real benefit comes in, and we'll talk about it here some on eligibility, is that you're able to drop your interest rate and ideally save quite a bit. So let's say you have a $500,000 loan balance right now, and you're at something like 7%. If we could pull it, let's say 6.5%, and we'll say we're pulling it down to 5.5%. Probably more realistic world. That's what we've seen a lot lately. So, and again, rough numbers, throw everything out. I mean, it's no guarantee, but let's say it's for range's sake. If you just saved that 1% on that loan balance of $500,000, you're saving over $400 per month. Pretty big savings. Let's now look back at that client 20-year vision we have a paid for, near paid for home by retirement. If you took that $400 and applied that towards the principal of your loan balance, you would pay that loan off very fast. And in fact, we have built our own tool and calculator to tell you how much you could shave off in interest. We'll talk about that here in a minute. And if you want the more detailed scenario, you send us a mortgage statement and we can give you an exact scenario to show you what that could look like. But the key is, these IRRRLs are real powerful, and they allow you to easily pull back your interest rate so long as rates are lower. In general, we can do that, but it allows you to lower that monthly payment so you can put it back to paying that mortgage off faster. Or some people like to do, it's just hard to hypothesize, take the money and reinvest it so they can build up a bigger nest egg so when they get out, they have that financial security that we want to help folks see when they retire or happen to get out of the military. So that's really where the huge benefit in these are. We always point out, and you might hear from folks that do VA IRRRLs, they'll say the appraisal, the minimum income documentation, sometimes a credit one, that's what we talk. Others will talk about the speed because we can get them done in like 2 weeks or less if we need to. They're really fast and simple, as we'll touch on here in a minute. But the big one I'd say overall is just that if you can save those funds, it allows you to go achieve that vision. And that's something that we don't always hear talked about, but it should be. Maybe that's because a lot of folks think, I'm going to save $400 a month, I'm going to go buy the Tesla or go on that vacation. I personally would urge you to pay attention to that vision and then go on all the vacations you want once that house is paid off or once you've stacked it away so it's a good nest egg for when you get out. That's why we love this. That's why we're passionate and care about getting the word out there for what these refinances are. And that's also why we build some really cool, unique tools that we're going to touch on here in just a minute. But that was a segue. So now let's get back to a little bit of the eligibility, where I'm going to touch some more on that and just the process in general of how these puppies are done. So, eligibility. There's 3 things the VA wants to see happen on these. I use the 3 benefits, which is kind of cool. Now, these are the 3 things that the VA requires us lenders to comply with in order to do these. Because if you're listening to this and you know mortgages at all, you're like, wow, this is a sweet loan product. And it sounds like I could do a lot of loans. And some people out there might be like, I could do a lot of loans and make a lot of money off of vets and military members doing this. The VA has put the brakes like, hey, whoa, you got to make sure there's true benefit to our military families that are doing this. So the 3 major things are, number 1, we need to make sure that you drop your rate by at least 0.5% on the interest rate. So you must see some tangible savings there. Now, typically 0.5% or greater on that interest rate savings makes sense for larger loan balances. Because some people right now are like, well, does it really make sense at 0.5%? I'd say it depends. Larger loan balances, there's a good chance, and it depends on your state, I'll say too. So Florida, for example, it ain't a very cheap state to do a VA refinance. Colorado, Tennessee, California, ironically, just because their state taxes and everything else, a very affordable state to do a VA IRRRL. So I would say the 2 biggest components is your loan balance and I would say your state on how beneficial a VA IRRRL is going to be for you. So when we look at those, 0.5% typically is good for those larger loan balances in most states or the right states. If you're a smaller loan balance, we usually want to see that savings be a little more than 0.5%. And when you're like, Evan, what's big, what's small? It all depends on area, but my rough gut feeling from what I've seen is just we're doing a lot of these the last month. We're around like the 20 ballpark here now. Looking at it, if you're about 300 or so, $300,000 to $400,000 range is where you start seeing that small versus big. If it's under $300,000 loan balance, you might want to see a little more than 0.5% savings. You're over that, and depending on the right state too, right? Then it might make more sense. That's where it gets a little bit squishy. If you got a large loan balance though, like well over 500 or whatnot, 0.5% it really starts making sense most places. Not all, but most places. We'll talk about how you can get a better example out here in a second. But know that we got to drop you at least 0.5%. And right now, we're seeing people drop full percentage points, some even more. The other thing is that we need to see you recoup the cost within 36 months. So the VA effectively says, okay, lender, cool, you're dropping them 0.5%. But if you're charging them 10 grand in what's called finance points or finance charges to bring them down to that, that might not make sense, because that's kind of one of the sneaky ways. If you watch some of my other videos, lenders can charge you. I can say, oh, your rate's this. You're like, wow, that's a really low rate, Evan. Yeah, it's really low, but I didn't really tell you that you're also paying what's called finance points to get that lower rate. And points, they sound innocent, I like to say, but 1 point equals 1% of the loan value. We should almost just call them percentage points, but I guess that actually might be points. But then people get confused with rate. I get that too. But the whole deal is that the VA effectively has put these stipulations in place to make sure that as a lender, someone's not like, oh, we'll drop you 0.5%, but we're going to charge you 2% in points. So that's effectively 4 years in rough analysis there of what it would take to recoup it. The VA says 36 months or less. So that helps protect you. We typically see that number pretty well under 36, unless you're wanting to get aggressive on that rate for some reason, unique scenarios. But most part, you should be seeing that well under 36. And in fact, just as we talked about you paying money to get a lower rate, cool thing on these refinances is you can take a slightly, I should say, less low rate or higher rate than the lowest rate and actually get a credit. So in the same way that if you pay money to get a lower rate, you can take a higher rate and get money. And on these IRRRLs, sometimes that's pretty cool. Because let's say the cost of doing this refinance for you is something like $2,500. Our charge is really minimal. Typically going to be around $850 total as the lender ourselves. And if you want, we can get you this credit or roll it into the interest rates. That's another thing. Another video, 3-way teeter-totter. Watch the 3 different ways lenders charge you. That video is all over and went, I say viral, and viral world for us is like 1,000 views. But good stuff for it to explain. But point is, if you want, you can actually take a slightly less low rate, essentially, and get paid a credit. And let's say you took a credit, you could get a credit of $2,500 to cover the $2,500 in lender, title, taxes, and all those fees, so that then all of a sudden you actually have the money that covers your costs. That's a pretty cool feature of doing these IRRRLs as well. You still lower your rate, you got a credit that covers all the cost. It's the closest thing we call to a free lunch. Point is, you got to recoup those costs in 36 months. Now, the next thing the VA requires is that you've waited at least 210 days from your first payment. So that means that if your first payment was November 1st, you had to wait 210 days in order to do this. But that's not 210 days to wait to decide doing it. We have folks, we usually are reaching out and getting ahead of this, and we'll reach out to you around that like 5-6 month, when 210 days is typically going to be that 7-8 month mark. We'll reach out to you early, because it's possible to always lock in a lower interest rate earlier, prepare everything, and close right after that 210 day mark is done. So it's something you want to start watching more around that 6 month mark than that 210 day mark. And if you're wondering how you do that, we got a solution for you here in just a second. But those are the 3 major things that VA requires that we follow, especially as lenders. So know that if you're able to do an IRRRL, there's a good chance you're not, can't use the word, there's a good chance you're not getting gypped on it, essentially. A good chance, I should say. Sometimes that 36 month deal can stretch things and not make sense. But there are some good mechanics in there to help protect you. Now, the process of getting this, you're like, Evan, I kind of like this. This is interesting. By the way, my rate's over 6%, and I'm curious what this looks like. What's the process? So a process right up front is trying to get a quote for it. That's number one. Simply send your mortgage statement. This is how we operate, at least, to give you an understanding. Send us your most recent mortgage statement, and then we'll get you a quick quote to see if it's worthwhile. Takes about 15-20 minute discussion. You send over your mortgage quote. Within a day, we'll turn that around to a couple examples. We've built our own proprietary software specific for VA loans, which is really cool, to help show you how the savings breaks out. We usually give you that scenario where we like to call it your closest thing to a free lunch, your no-cost credit option, where you're taking that lower rate, but maybe not as low, but getting the credit to cover all your costs. That option, plus we're showing you, hey, if you're okay with your loan balance going up a little bit, because you can do that on these IRRRLs too, you can take this super low rate, and you might just want the lowest rate because you might not see yourself refinancing again in the future, and you're going to hold this home forever. Maybe you want to do that. We'll send you a couple options. We'll talk over those basics for you, and then you just decide. If you want to wait, no problem at all. That's the first step. Just requesting that quote, getting us your initial mortgage statement. We get you an idea of what things look like, and then you decide if you want to go forward. If you look at that, like we had this morning, a couple, and they're like, let's do this. Let's rock and roll. Cool. We'll go ahead, we'll get that loaded, locked for you, and then we'll send you your initial disclosures. Typically, you're going to get that pretty quickly within a couple of business days, and you're going to review those. Once you sign off on those, we'll be able to work with title to get your more accurate estimates for taxes, insurance. Work with your insurance provider. If you're not a past client, we'll ask you for some information there and get that taken care of. And we'll send you the final disclosures. You'll get to review those. Here's the cool thing. If at any point in the process you're like, Evan, I just don't like this or whatever, or rates drop dramatically further, you don't have to go through with refinance. Unlike purchasing your home, where to not go through with the loan, you might have to actually lose the deal. You're not losing your old mortgage rate if you decide to terminate your your streamlined refinance. A lot of lenders might not want to tell you that because it's like, we want you to think the deal's got to go through. You still can if you absolutely don't want to. It's perfectly fine. That's kind of a cool feature of doing this. So you can always find, ideally, the best time of getting this one done. But if you do decide to go forward, after that last round of disclosures there, we set you up for signing. And that's step 3 here that says close. I mean, it's really as simple as these 3 steps. It's much faster, much simpler than your typical home purchase. In the close, the cool thing is you review those final disclosures, and we've rolled out that we can now do our VA closes virtually. So it can be virtual or in person. If you remember your purchase, most likely you went to the closing table, signed it, or if you're military, you might have used a power of attorney, signed something, mailed it back in a document. Cool thing earlier this year, we're able to roll out virtual closings on VA loans. Now, it doesn't work everywhere, I'll say that. About half of title companies seem to be able to work with it, and then it's sometimes a state thing too. But in most places now, these virtual ones for refinances are working, so that's a big plus. And you can do it remote. Right now, we're helping a lady also do her refinance right now. She's overseas. That's really cool. Over in Europe, we got a couple where one of them is deployed right now, somewhere in the Middle East. And ultimately, you're like, hey, how do I do this? Do I got to mail back this power of attorney and everything, or the documents? No, we'll send you the link virtually, and you can get it knocked out. Really, really neat feature. One of those unique things, working with someone who gets that, especially in the VA loan space. And hopefully we start seeing wider adoption of that too. But no, that's the process. Really simple and smooth. Now, you're like, Evan, I like those benefits. Okay, hey, I want to come see that. I get the process. I'm going to send you a mortgage statement, and let's see what this is like. Or you told me, Evan, I'm not sure about that. I don't know if I want to do it. Or, hey, I closed and I'm at like a 5% interest rate or 5.5% or something like that, or 4s. Lord forbid you still got one of those 3s, but you're just itching thinking, maybe one day it'll get back to that buddy of mine who got a 2.5. How do I get there? Well, if you want to track that optimal time, let's go talk about our VA Rapid Refinance tool. This is cool. So, another thing, back to that client 20-year vision. It truly drives us. I like to, how you get things genuinely across. It truly drives us. How do we help folks have paid for near paid for home by the time of retirement and get there? You got to have these savings. So how do we build unique tools and products that can help drive us to achieve that client 20-year vision? Well, we built that. Thank you to this guy over here who's also helping us do this filming to help make that a reality. Matt's made it. It's been fantastic, and we're tweaking it. We finally rolled it out officially about a month ago. Cool thing about this tool, you can go in and put your rate, put your close date, and it's going to tell you 2 things right away. It's going to tell you if you're eligible for a VA refinance based on timeline. Remember that 210 days we were talking about? It's going to check that against what you put in. And then it's also going to see if you're eligible based on the current rough rates that we can offer you. And our rates we offer aren't baloney rates. That's what I like to call them. Sometimes if you're right now watching this and you've got a VA loan on your house, you might have gotten pummeled with mailers and then telling you like, man, we'll refinance you down to nothing. And you're like, that just doesn't sound right. Most likely it's not. So our rates aren't where we're putting points on there and loading up to the cost. They're reasonable rates for it. So it's going to run that against what we have and tell you if it looks like it's possible right now or if you're getting close. Then it's instantly at the same time, without you giving us much information, we mainly just need an address so we can get the state and everything set up right for us. We got to reach out, we got that for you. But the key is when you do that and it drops down, it'll give you a rough estimate of savings. And that gives you a real idea of, hey, what you could see here. If you decide then to shoot us your email on the next slide or your contact information, we'll reach out to go through that next part you saw, step 1, 2, 3, getting you a legitimate quote. Now the other thing too is if you sign up for that and you're not in the zone, we're not going to bug you like crazy. You'll get a couple introduction emails, but here's the cool thing. You're now registered in this notification system so that if rates drop low enough or you hit your timeline, you'll be automatically notified. Here's something that as a real estate broker, before, now I really don't sell real estate anymore as much, it's more all doing loans. And now as running our mortgage company here, The last 2-3 years, you've probably heard the term, hey, just buy the home, lower your rate later. Don't worry, the rate's high, just go ahead and refinance later. Or a term that just kind of weirds me out, date the rate, marry the home or whatnot. It's kind of weird. Then sometimes I feel like I'm just being dated all my life, but I guess thank you to my lovely wife who's stuck with me and given me 4 wonderful children and maybe more. But point is, date the rate or lower your rate later. And then I'd ask the question, okay, well, when? You ask the borrower, the homeowner, hey, when are you going to know when to refinance? I don't know. News? Is my agent going to tell me? You ask an agent, hey, you told all your clients that they need to refinance later. Don't worry about the rate. You can always refinance later. How are they going to know? They're like, maybe the lender? All right, I've been in mortgage. I don't see anything for lenders that's like notifying them, go, hey, they're ready to refinance. There's nothing that's direct. There's a couple rough systems out there that are trying to do it, but they're trying to account for conventional VA, FHA, all the loan types, and it just doesn't really work well. So I've seen where there is no product that does that. So we built something very specific, very niche to track specifically VA loans because that is our business, that is our focus. And so if you put your information in here, you'll actually be notified when there's a reasonable time to do a refinance. A cool system that we've built for it. So if you plug your info in, we'll reach out when that time is eligible for you and you'll get a notification. And that's a cool feature of this refinance tool. I spoke way too much about it because I'm super excited with it because it gets us back to that client 20-year vision. So basically, be automatically notified, receive estimate of savings instantly there, and then just never worry about missing a good rate. Here's the thing that bothers me right now. Doing a bunch of refinances, over half of them are with folks that weren't our clients or with other lenders. Some of these people could have refinanced earlier this year. I was going to say 6 months ago, and I thought, oh my gosh, there's already August, almost September. Some of these people could have refinanced 9 months ago. And we're talking similar savings in because there was a dip a little bit earlier this year that we could have got them back in the same rates now in like that mid-5 range. Holy cow, they could have saved some of these people 3, 4, we're looking right now, one is like $600-700 a month for the last 9 months. But why didn't they get notified? Because again, it comes back to who you work with, folks that understand it, stay focused on what your loan type is. We stay focused on VA loans. That's our focus. And we're very passionate about it. So, question and answer session. I'm going to glance over Matt and see, do we have anything in there? He's pointing at my phone like there is questions. Oh boy, I spoke for a straight half hour about that. I love it. And if you're actually curious about some other words as I pull this up, we had a really good podcast. And this is where I'll give a pitch for old Eric because I think he did a great job. We didn't get on this slide because now you see the next step slide. Hey, you want to get a loan? You got the spot there. You want to see resources? Go to that gray QR code or link. And on our website, just weavet.com, top right-hand corner, refi tool. Click that. That'll be that refi tool if you wanted to register up. Really worthwhile tool to register for. Well, I see all these notes from, okay, looks like Shannon sent these to me. Thank goodness. Oh, as Shannon mentioned, someone mentioned VA Loan's birthday was in June. Fantastic. June, and we are now in August, so we're just past the birthday for it. Remember when we posted that for it? Question from old Billy. Billy, you're a wonderful man. If your mortgage is with another company, is it easy to change company and still get the IRRRL? Totally. So the IRRRL, it's a streamlined refinance, so it technically is still a new loan. But because the VA is still guaranteeing it, we don't need the same type of documentation as if it was a full loan. So that's a cool part of it, meaning that you're going to effectively apply for a refinance with us if we're doing it the same way that you would with any lender. And then effectively we're just replacing that other loan and that's it. So it'll be a new loan. You'll get new servicing information and everything. It's just a streamlined process. Hence the word VA streamlined that you hear quite often. So really good question. It is literally the same process and ease for our past clients versus clients who weren't our past clients. It is the same process. So it's the same amount of time. The only slight benefit you might get out of being a past client, at least of us, because we'll go to this effort, is if we have your insurance provider, we can maybe sometimes get that without you needing to get some insurance information. That's it. So there really is no difference between going through your current servicing company and us, other than the speed, the rates, ideally the professionalism, as I like to say, and the care, hopefully, because you're in our new tool and we'll track it for the next round too. But great question. All right. Another one. If I have a conventional loan and want to refinance the VA loan, can I still use an IRRRL as a separate process? fantastic question. So the goal of this discussion was on VA refinances for IRRRL specifically, hence that was somewhere in that title. VA cash out refinances. This is where you're not just lowering the rate, but let's say you're trying to pull money out of the property or convert from a conventional to a VA. That's what we call a VA cash out refinance. Now all of a sudden, all your traditional underwriting kicks back in. We'll need an appraisal, we'll need income documentation. Think of it, it's not quite perfect, but almost think of it as you're doing a new VA loan, like for a purchase, but for your home. It's like you're almost buying your conventional loan from yourself and replacing it with a VA loan. Not quite the right way of it, but it's effectively a whole new, what we like to call full documentation loan that you're taking. Because technically it's a whole new sum of money paying off the old one. Or if you would like to do a cash out, another scenario of that, or we're trying to work for someone right now is, hey, they've got a lot of high interest debt. Their mortgage is actually lower. It's like in the 4% range or so, but all their credit cards and car debt and everything has spiked way up. And they're like, hey, can I somehow can I pull out cash of my home rather than do a HELOC or some other parts? VA loan with that cash out can allow you to, if the rate's not too crazily different, effectively take out a new loan, pull some cash out of the home, pay off that other debt, and kind of consolidate the debt into a lower rate. They're calling that a blended rate, is the new term going all over the mortgage world. Personally, I'm not a huge fan unless the numbers truly work to where you're reducing your overall debt load, and just got to make sure that you're not putting yourself in perpetual debt. But great question. If you're wanting to convert from conventional to VA, that is what's called a cash out VA refinance. You have the appraisal, you have all those things. Still, a benefit is typically more competitive interest rate than your conventional loan, and down the road you can do a VA IRRRL. We've done one where there really wasn't a major benefit, but they literally just wanted to make sure they were put into the VA loan so they could do an IRRRL in the future. And knock on wood, another few months if rates stay where they're at, that's going to pay off for that person because they did it back when it was higher. Now they'll have the chance to do the VA IRRRL, less risk, less cost than a conventional one. Excited for that to work out. So good question there. Double check anything else for us. Looks like we're good. If there are any other questions, please feel free to drop them down in the comment section. Thanks for helping us through this first. This is our first crack at doing this VA refinance one. So we're going to keep trying to always improve the slides and then get one of these out there. It's kind of like all of our other talks that we have on our website. They all typically started as a webinar like this. We refined it a bit and then we shot it and framed it up and made it nicer and took it from a 40-minute video and got it down to a nice condensed. This one's probably a 15-minute video with quality punchlines and slides. So we'll work on getting that too, so we have an even better IRRRL video than some of the shorts we have. But thanks a lot for being with us as the start of this. Any questions, we're here for you, and looking forward to having the opportunity of working for you in the future. My name's Evan Kaufman again. Take care.